Okay. Good morning, everyone. Thank you for joining us at our next business success webinar. Today we have a great presentation today by Julie Fletcher. She's the VP of Business Banking, team lead at Enterprise Bank and Trust. So we'll go ahead and get started. But before then, if you have any questions, please make sure to use the chat feature. Nice little way of asking questions. Or you could also go ahead and raise your hand and we could unmute you so you could ask Julie directly. This webinar, as you can see, is being recorded. So if you missed any moment of it, we'll go ahead and share it with everyone at the conclusion of today's session. So with that, we'll go ahead and turn it over to Julie to kick us off for our presentation today. We'll also have a little Q&A at the end, so make sure to write down your questions and include them in the chat. So thank you so much, Julie.
Thank you, and thank you to the Hispanic Chamber for giving me this opportunity to speak to everyone. Good morning. I'm excited to be here. We're going to talk about becoming bankable, or lendable is another word for that, and what are the components to becoming a successful or acquiring rather a successful loan. I'll give you a little bit of information about me, and then we're going to go into our agenda, which is a little bit about my bank, just so you understand who they are, and then the definition of bankable and some components of it. We're going to talk in some detail about this third section called the red flags. These are the things that scare a bank that usually end up creating a situation where people don't end up getting along because they're red flags. And then we're going to talk about starting where you are. If you, after seeing this webinar, you feel like, gosh, I'm not there yet, I've got tips for you on how to get to where you want to be. So this is my contact information. As stated, my name is Julie Fletcher. I'm the Vice President Business Banking Team Lead. So I run a team of business bankers in Arizona for Enterprise Bank and Trust. This is my email address and my phone number. You are more than welcome to email me or call me after this if you have more questions that we weren't able to answer. If you want to talk about the PPP loan, this is not a webinar for that, but I know a lot of people have a lot of confusion around it. Happy to answer questions on that as well. So I have been a banker for just under 5 years. Prior to that, I spent over 21 years as an entrepreneur, just like you. I owned 2 different businesses that were successful, and I really enjoyed being an entrepreneur. My first one was a business consulting business that really focused on the construction industry. We had 8 locations across the state of Arizona, 8.5 years later, and 8,000 plus new businesses that we helped develop. I decided to spin off from that business and my business partner to open up another consulting business that wasn't focused solely on the construction industry. That business I ran for over 12.5 years, and I had offices in California as well as Arizona. We wrote business plans, set up businesses, coached, consulted, and I also spun off a business brokerage to help people buy and sell businesses. When I decided I was done, I was not done with working. I still wanted to be out in the world helping entrepreneurs, and a great opportunity came my way with Enterprise. And I love working with Enterprise. I'm going to go into my next slide and tell you a little bit more about them. Enterprise has been around for over 30 years. They're entrepreneurial in spirit. If you look over to the left, you'll see this 7.1 NPS. That means Net Promoter Score. That's our score that our customers give us on how satisfied they are with our bank. The average bank, it's a little blurry, but I don't know if you can see it, but the average bank is a 53. So we're quite a bit higher than the average bank in terms of customer friendly. We are worth $8 billion in assets, so we have a strong lending capacity. We're in 5 markets. We're in Missouri, Kansas, Arizona, New Mexico, and Southern California. We are absolutely passionate about giving back to the community. we have a program called Enterprise University that you can find on our website. Enterprise University is teach and train courses semester by semester on everything running a business, from marketing to finance, operations, you name it. They're free courses. You can take them currently online. They used to be in person. I'm not sure if they'll ever get back to that. I also want to point out this one at the very bottom where it says 1.456 billion. That's the amount of dollars we have pumped into community development loans throughout the markets that we represent. All right, enough about Enterprise. I want to start us off with a quick poll. And let me see if I can figure out how to do it. There we go. All right. I want to know how many of you have ever been denied a business loan. Okay, so yes, as I've applied and I didn't get the loan. No, because I was approved, and then I've never applied for one. Ready? So go ahead. Okay. Almost there, got a few more people. All right, so I'm going to end the polling. It looks like 70% has never applied for a loan, which is great because that's why you're here. I'm going to show you how to get a yes. And those of you who have already gotten a yes, I think you'll still probably find some value in what we have to say. All right, so I'm going to get rid of this poll and I'm going to go to a little bit of psychology. For starters, I want to talk about the difference between you as an entrepreneur and the banker, okay? An entrepreneur is a risk-seeking, optimistic individual who is well-knowledged in their field. Their background is typically not heavily regulated. Some industries are, but most aren't. A banker avoids risk at all costs. They do not want to lend and lose their money. They're pessimistic. So while you're looking at the optimistic side of your business and all the ways you can grow, we're looking at all the things that could go wrong. We are usually educated in accounting and finance, where again, you're in a trade or a specialty in your industry. So typically, not always, but typically you're not in accounting and finance. And then unlike you, we typically are heavily regulated, or we are regulated. So why am I showing you this? It's very important that you have a relationship with your banker. I say banker, not bank, because every business owner should have a banker in their back pocket. You should be able to pick up your phone and call your banker or text them when you need something. That's what commercial banks do for you. Because most commercial banks, their goal is your success. And the more they know about who you are, the less pessimistic they are, the less concerned, the less risk that they feel. So get to know your banker, find out who it is. If you don't have a banker, call me, I'll help you. And we will get started on the next slide. So the definition of the term bankable is really lendable. And it's defined by your ability to have sufficient collateral, future cash flow, and a high probability of success. And those three elements combined will help a lender finance you. Now take a look at this trajectory right here. Every business has highs and lows. I think you'll all agree with me that businesses are not typically a hockey stick. And if they do, that has its own set of concerns that we'll talk about later. I'm telling you this because people tend to go to a bank when they're down here, not when they're having this good year. This is a hard time for a bank to lend to you These are easier times for a bank to lend to you. So the reason I'm pointing this out is because we'll go over the red flags later. But when somebody comes to their bank and they're worried and they're concerned because they're losing money, that's the hardest time for a bank to lend to you. So preparing, and we're going to talk about preparing a little bit more in detail later, is getting to know them, your banker now, when you're high, when you're up, when your business is growing. Get the loan now so that you can use it when you need it. All right, next slide. We're going to talk about collateral. I am sure that at one point in your life, if not now, you have either purchased an automobile, a vehicle, something, and you know that when you personally purchase those items are held in collateral by the bank. So if you don't pay your loan off, what happens? They take it. A business is the same. The first thing a banker looks at is, what does the business own collateral that we can secure against the money we're lending to you? So examples of collateral would be business auto, inventory, real estate, invoices, invoices for purchase orders, machinery, equipment, and investments. For example, a CD or some stocks, depending on how they're structured. These are the business assets that we collect as collateral until you're paid off. Now, I will tell you that if you're looking at this and say, I don't own any of these for my business, not every loan requires collateral. And we do have the SBA, which I'm going to talk about a little bit later, that can help if you have what's called a collateral shortfall, meaning you don't have enough collateral to secure the loan. But you can also look at your personal. Most people don't want to put up their personal home for a business loan. If you don't, we understand. But if it's a difference of getting your loan or not, you may want to consider that as well. Okay, cash flow. The total amount of money being transferred into and out of your business. Okay, this is designed for liquidity. We look at, after we've looked at your collateral, we're going to look at your cash flow. Can you pay your bills? Are you struggling? Is your struggle currently a result of what's going on in the world right now, or will it rebound? How quickly will it rebound? What does your historical data show? How many years have you been successfully cash flowing? Meaning, again, being able to pay your bills. We don't just look at your cash flow today. We look at all your historical data, and that historical cash flow predicts your future cash flow. If you have 2 to 3 to 4 years worth of positive cash flow, you're paying all your bills, you're making it, you're not loaning money to your business left and right, you're not struggling significantly, we can predict what your future is going to look like. Now, that prediction takes into a lot of other things, like your industry and the economy and other things that we would discuss with you. But from a cash flow perspective, that history defines the future. I want you to look at the bottom left where it says global cash flow, and then it says business, personal, and other business. Cash flow for a bank is everything about you. So we look at your business first, and then we look at your personal. Why do we do that? Well, let's say you're thinking right now, I haven't cash flowed. My business is still not cash flowing, but I pay all my bills because I have another job. My spouse has a job. I'm a partner in another business. That is global. That is you, your spouse, your home, your other businesses, your investments, everything tied together creates your global cash flow. That's actually the cash flow we're most interested in. So don't be discouraged if your business isn't cash flowing well right now. If your personal is, it's still possible that you could get a loan. All right, let's talk about that third component, the high probability of success. So I just mentioned to you the proven past success. And that crystal ball tells us what the future is going to be. I've drilled this in a couple of times because it is so important. Projected ability to maintain and grow is vital, because if you don't show the ability to grow and maintain your business over the course at minimum of the life of the loan, it's unlikely you're going to get the loan. Okay, we've talked about 3 major components. We're not going to do the poll yet. I want to know if there's any questions as of right now. If you have any questions, put them in the chat about these 3 topics we just covered. I'll wait a few minutes, and if I don't get any questions, then we'll move on to the next poll. Okay, if you do have one that comes up, then about collateral, about your cash flow, about projections for future growth, you let me know. But for now, let's go to a poll again. So poll number 2. Oh, that's not the poll. Poll number 2. Do you have a budget? Do you have a budget already in place that you pay attention to, that you monitor? Answers are absolutely, sort of, no, and what's a budget? All good answers. No one can tell who's voting for what. So put the honest answer in so that we can have a real conversation about budgets. Wow, we've got a tie here. Got a few more people that haven't answered, so I'm going to give you a couple more minutes or a couple more seconds, and then we'll close it out. All right. So 60% are sort of, and 40% are absolutely. Nobody said no. And nobody asked what a budget was. So that is great news, because the budget is vital to getting a loan. Let's continue. Okay, red flags. So we talked about those 3 components. I'm going to keep drilling them in: collateral, cash flow, future success. Okay, so we are looking at all 3 of these components the entire time we're looking at everything we've asked of you. And along that journey with you, as we're asking for more information, as we're having a conversation with you, things pop up in the conversation and in the documentation that you provide us that create red flags. Number 1 is no budget. If we say, what's your budget for 2021? And you can't answer at a high level, that gives us huge concern, because flying on the cuff of your business, I think I'm going to be okay, I might have sales, is not reassuring to a bank and shouldn't be reassuring to you either. Every year with my business, in December, I sat down, November, December actually, and I wrote my budget for the next year. I reviewed everything I'd done that year, the year before, a couple of years before, and I predicted what, based on historical data, my budgeted revenue was going to be for the new year. I also budgeted out all my expenses, the ones I currently had, the ones that I may end up acquiring, like new hires, new staff, and I put them into my budget. I actually used to put my budget right into QuickBooks. QuickBooks has a feature if you're using it, and it's fantastic. Before I had QuickBooks, I used to put them on spreadsheets. Now, I knew that budgeting was so important that I actually took my budget for a year and broke it down by quarter, by month, by week, and by day. I shared my revenues budget with my sales team. In both of my companies, I had about 25 salespeople eventually. And I would share it with them every year. And the reason I did it by day is because I gave them their daily goal, their daily quota of sales. This is how much we need to sell every day to reach our goal for the year. The first time I did that in my first business was in year 4. I never shared my budget with my team until year 4. In year 4, I put my revenue budget into play with my salespeople, and I gave them rewards for hitting their goals. And guess what? We grew 600%. We surpassed our goal, my budget, and the year after that and year after that we did. So budget's vital. A banker knows how important a budget is. Excuse me. And that's why it's a #1 risk for a bank and a red flag. All right, let's talk about number 2 real quickly. You don't understand your own numbers. If a banker says, what did you do in sales last month, and you don't know, that's a red flag. How do you not know your numbers? Were you profitable over the last quarter? You don't know, you've got to know. I know most people are not accountants and bookkeepers, and most entrepreneurs just do not like to look at their books, but it is invaluable. It tells you if you're on target for that budget. It tells you, tells us as bankers that you know financially where your business is. Poor credit score and credit references. I hear this all the time. People say to me, I want my loan to be based solely on my business. I understand. I felt the same way when I was a business owner, but the harsh reality is your business is you. Unless you're publicly traded or you've got a huge management team and structure, everything you do reflects on your business. And therefore, we need to see that you personally pay your bills. If you don't have a good credit score, that's a red flag. Your primary concern is rate, number 4, or guarantee. People come to us and say, I'm only interested in what your rates are. Well, most banks want a relationship with you. Most bankers want to understand who you are. If you're just asking for a rate and we say, okay, well, 4%, 4 to 5%, that's our rate, and you walk away, you miss out on the opportunity of having that relationship, having the advisory that a banker provides for you. And banks see that as a red flag. We may not want to bank with you if you're only interested in how much we're going to charge you. Doesn't mean we're going to charge you more than other people, but coming off to the banker immediately like that puts a red flag in front of us. Let's talk about guarantee. Okay. Another thing I hear people say all the time is, I want my business to sign. I don't want to sign personally for my business loan. A personal guarantee of a business loan means this. In the event that your business cannot make the monthly payment, you promise to make it on its behalf. That's what a personal guarantee of a business loan is. Why is that a red flag? Well, if you're not willing to sign on the dotted line, if you're not confident in the fact that your business is going to be able to pay the monthly payment to the point that you're not willing to sign it, that's a huge red flag. And in most small business loans, it's a deal breaker. It's a big one. Let's go to number 5, poor communication. That's with your banker. Your banker emails you, your banker calls you, you've asked for a loan, we need things. You don't respond, you just respond slowly. You give us very little information when we're wanting to learn about your business. That's a red flag. Turnover ratios. Okay, that would be if you had inventory, how quickly you're turning your inventory. If it's starting to slow down, that's a huge concern for us. No skin in the game. That's money. You haven't put a dime of your own business money into your business. You're asking for money to be all outside of you. Now, I know that when you're strategizing, you want to put as little money in a business as you can and use the money of other people, right? We've talked about that. People talk about it all the time. But a bank wants to see that you've got skin in the game, that you've put your own money in. That tells us you have so much confidence in your business that you're willing to put your own money into it. Number 8 is down here at the bottom, responding piecemeal to financial requests. Surprisingly, that's a huge deal to a banker. We have a window, a small window of opportunity to process your loan, and usually about 30 days before we need to ask you for more documentation. If you give us one piece of information after the other very slowly instead of all at once, then it makes it very hard for us to close your deal and doesn't really send a signal to the bank that you're that serious about this loan. So we advise you to take the list of items that we give you, put the entire package together and give it to us all at once. I'm going to talk about one more thing on this point because it's really important. I hear people say all the time, one of their number one frustrations with their banker is that they ask for a list of items, they send it to them, they worked really hard to put them all together, and then they keep getting more requests for more data, more documents. That's because we haven't figured your business out fully yet. Or there are nuances to your business that we didn't know until we dove into that package, and now we need more. So be patient, communicate well, get those documents to them right away. It's not really jumping hoops, it's protecting you. They're not doing it to be difficult, they're doing it so that they can give you a home run. All right, let's go to the next one. I've got just a few more red flags to share with you. Growth and expansion happening too fast. Do you remember we talked about the hockey stick? Okay, if you grow your business too fast, you may not have the operational efficiencies necessary to make it happen. I'll give you an example. In my consulting firm, I helped a company here in Phoenix that was a wedding venue. They were brand new, and she brought me in to help consult and grow her business and help train and grow her sales staff. I went in and there were no scheduled weddings. I went in March, there were no scheduled weddings at all for the whole year. I went in, I trained her staff, and we sold out the entire year in 2 months. Every week, every day had something in that facility. And what she didn't have, and what we didn't discuss at that time, was her operational efficiencies to handle it. So she started scrambling to try to hire people to handle the back end. She had to get with her caterers. She had to get with her lighting people. She didn't have anybody on staff that was an expert on helping the bride. She had employees, but she didn't have enough for the amount of growth she just saw. So keep that growth intact. Make sure as you grow with your revenue that you're also showing your operational growth. And we're going to talk about a business plan in a little while. And that business plan has an operational component that I'm going to talk about. So we'll go over that later. All right, overall cash flow. It's in here. That's that global cash flow that we talked about. We won't go into it because it's the same thing. No management team. That's not a deal breaker, but it depends on how big your business is. If it's just you and that's it, and you cover all the other areas, it's not going to be a deal breaker. But if you're a large company and everything relies on only you, that's scary to a bank, because what happens if you're gone? So are there managers in place? Are there people that can take over for you? These are very critical to the success of your business. Overly complicated ownership structure. We have companies that will come to us and their initial entity is owned by 5 other entities, and those entities are owned by 5 other entities. That feels like you're overly protecting yourself, and I think you're avoiding risk, but at the same time, you're making it really hard for us to figure out who actually owns this, so we can take a look at the individual that is applying for the job, for the loan. So again, it's not a deal breaker, but it's a red flag. Okay, number 13, tax income is different than book income. We're going to spend a few minutes on this. This happens with everybody. When I owned my business and I opened up my brokerage, people would come to me to sell their business. I'd look at their numbers and they were always different, always. There was the tax returns that showed a negative cash flow, no profit. And then there was money in the business, but there was cash and it was going into their pocket and they didn't report certain things. And the entire reason for every entrepreneur that I've ever met is that they don't want to pay taxes. I'm avoiding taxes. I don't want to have to pay taxes at the end of the year. That's fine if that's your business model. If your business model is that you want to grow, and through that growth you need a loan, you're going to need to show a profit on your tax returns. Your accountant or CPA should know this plan of yours. If you go to them and say, I don't want to pay a lot in tax, but I also want to be able to get a loan this year, so I need to show my profit as it is, then they'll do it accordingly. It might hurt a little to pay a little bit in tax, but the benefit of getting a loan to help you grow will far outweigh that. Let that sink in a minute, because that one's a big one. I used to have a business partner in my first company that said paying taxes means you're a successful business. All right, the last one, number 14, fighting with management. Between partners or among family members, if there's a lot of struggle and strife in your business, it's volatile. And that volatility, can be a big red flag. We've seen, oh my goodness, I could spend a whole hour telling you all kinds of crazy stories about fighting between business partners and family members that have actually caused businesses to go completely out of business. So, poll time again. Before we do the poll, if you have a question on any of those red flags that we just went through, pop those into the chat and I'll answer them before we do our next poll. I don't see any. All right, let's do a poll. Number 3, last poll. Do you have a business plan that you actually follow? Yes, I do. Sort of. No, what's a business plan? Well, it's looking good. Right now we got 50% of the people are saying yes. A few more people haven't answered, so I'm going to give it a little bit longer and then we'll share. Okay. I'm going to end the poll. That's awesome. 50% said they do. That is wonderful. Business plan is vital to your company. We're going to talk about it next. Sort of, good. You're thinking about it. It's up here. Might be handwritten. It may be partial. You might have written it a long time ago, but not updated it. That's okay. No, I'm going to convince you in a couple minutes why you should. Okay, we'll close that out. Before I do that though, let's do this. I jumped the gun on that one. Let's start where you are. As you've been going through these slides with me, we talked about collateral. Do you have it? Do you not? We talked about cash flow. Are you struggling? Are you not? Does your personal home life, spouse's income cover you? Does it not? Do you show future results that are promising for the growth of your business or not? It's time to clean those things up. So to get ready to go to your bank for a loan, let's talk about some of the highlights. Increasing your credit rating, cleaning up your books and records. That's all about that, you know, hiding money, not putting everything into your account, making sure you show a net loss every year so you don't pay taxes, clean them up. Add backs, the second bullet down right here, if you can see this, I wanted to mention to you that there are things that you can take as a business owner to lower your tax burden that are okay by the IRS and the bank. Depreciation. We know that depreciation isn't real, and that we can add whatever depreciable amount back to your bottom line, and that's part of your profit. Amortization, interest on any other loans, we can sometimes add back depending on how we're structuring a loan with you. We will take the fact that you have paid yourself a salary into consideration. So there are things that we will actually look at that will help reduce your taxes and still get you a loan. I wanted to make sure I mentioned that. Okay, if you haven't prepared a budget for 2021, get it done. Global cash flow is positive again. I already mentioned that. And then business, home, spouse, other. Just remember your global cash flow. If you can pay everything with it, you look pretty good for a loan. All right, now let's talk really quick about interim financing, and then we'll get to the business plan. All right, now let's say you're not ready, but you do need money. There are ways to get money that you can go to that may be able to help you if the bank is not ready to lend to you yet, because you don't have all the criteria we need. One of them is factoring, purchase order financing. So purchase order financing means you've got money that's owed to you by a client or a customer of some sort. And this is done a lot in manufacturing. It's pretty widely used. It's sometimes used in construction as well. Not as often, but it does work. And this is where you receive the money from the factoring company now, today, to free up cash flow. And then they take your purchase order and they get paid your purchase order later. So you're freeing up your money. A small business development center, SBDCs, are great for helping you define your business plan, cleaning up everything, and helping you go out for additional funding in different places when you can't get a loan yet with a bank. There's something called a new market tax credit. We have one, other banks do too. It's basically a grant from the federal government that we can apply towards your loan, and we can apply it towards your collateral. So remember I said there's sometimes ways around having the collateral. The utilization of a new market tax credit can be one of those things you can do. And then like the Arizona Commerce Authority, they are big in helping financially. They have lending programs. They also have, if you're a technology or you have a technology, you can go through some of their programs to win grants. So there is money out there, even the chambers. Excuse me, I know that the Hispanic Chamber has been fantastic financially supporting people during this difficult time. All right, let's talk about the Small Business Administration just briefly. They can cover your collateral shortfall. A collateral shortfall, again, is when you don't have enough collateral for us to secure. They will lend a guarantee to the bank of up to 90% of the loan. So we are only responsible, basically, for the 10% above that in terms of risk. They have longer amortization schedules than a classic bank. So that lowers your monthly payment. So sometimes a bank will have a 5-year or 7-year or 10-year term. Well, the SBA can go much longer on that, so your monthly payment's lower. But they do have high fees. That's the only downside. There's a flat fee. There's no way around their fee. And there's a lot more paperwork involved, but they're fantastic. When you can't get a conventional loan from a bank, the bank can, if your bank is certified through the SBA, they can usually send you to the SBA for that guarantee. And they'll still be your bank servicing the loan. The SBA will be your guarantor. Any questions on the SBA or interim financing before I move on? Okay, I want to talk about a business plan. So I know a lot of you have a business plan, and a lot of you said that you actively use that business plan, and that's fantastic. I want to tell you what a business plan means to me as a banker. As a banker, it shows me that you've done your research, that you have studied your market, that you understand the operations of your business, and you have projected out your finances, ideally out over 3 years. It tells me that you've thoroughly defined your company and you understand that company, you understand it from every aspect. When I owned my business, I used to define my customers. Like, what are their characteristics? The people that come to my company have a certain characteristic, demographic, psychographic. These are things that are found in your business plan. Does a banker need a 50-page business plan? Never. And never, ever, ever write a business plan that has a lot of redundancy or grandiose information in it. You probably do think your business is fantastic, and we probably will agree with you. But if you keep telling us in the business plan how fantastic your business is and not just stating facts, it kind of turns into a red flag. So what you want to do for your business plan is, and by the way, you don't always need a business plan when you're coming for a loan. And I say always, but most of the time you will. And it can be as short as a 5-10 page plan with heavy financials to a 15-20 page plan. What I'm trying to say is it just doesn't have to be that complicated. Tell us about you, who you are, and what your expertise is and your business. What problem do you solve in the market, right? What made you decide to open this business? What did you see out there that was missing that you knew you could satisfy? What are your products? What do you offer? What are the services you offer? Describe them in detail. And again, not a marketing plea. It's not like this is the best product ever and here's why. It's this is the product. This is where we sell it. This is the industry. Industry reports are expensive. If you need an industry report and you reach out to me for any particular industry, I might be able to help you. We have access to industry reports. You can go online and Google and find some industry reports that you don't have to pay for, but it's harder that way. Demographics, again, I mentioned where they live. Psychographics, I didn't put it in here, but who they are, how they behave. A go-to marketing plan, right? So your marketing plan has to be what you're specifically going to do to get that revenue, how much you're going to spend, where you're going to go. Is it social media driven? Is it traditional advertising? Are you going to hire an advertising and PR company? It's got to be very detailed. The part of a business plan that lacks the most that I've seen over the years is the operations, executing how you do what you do. So you've got a business plan, you know you're going to reach these sales. How do you fulfill the client's need? I ran into this with a company in December. I ordered some candy from a candy company that I saw on Facebook. They posted a big Facebook ad and they got so overwhelmed with the amount of orders they had, they couldn't fulfill. I literally just got my candy 2 days ago. So again, how do you execute? Org chart. Show us your organizational structure. Here's you at the top. Here are the people that work for you, managers, everything. And describe their jobs. Tell us all about them and your partners. Tell us about who you partner with. Who are your vendors? We want to know everything about your operations. And we want to know about your growth plan. Look at the third tab here. It's all about growth. How are you going to grow? What do you project? And I'm not talking about numbers right now. I'm talking about new hires, expanding your location, making room for more, technology, globalization. How are you going to grow? And the last section of your business plan is finance. How much money do you need if you're using the plan for the loan? How much money do you need and how are you going to spend it? Why are you taking this loan out? And again, 3 years pro forma, which is a projection of your sales and expenses over the course of 3 years for a bank. All right. So we're at the end. I will still take more questions if anybody has one, but I just want to say a couple of things in conclusion. And number one is that your banker wants you to succeed. They do. They are your friend. They should be your trusted advisor. They should be guiding you for the lifetime of your business to the success that you know you want. They should be able to sit down and say, we can't get you a bank loan now, but let me tell you why, and here's what you can do so that we can look at you later, or congratulations, we've got the loan. Business loan decisions are objective, not subjective. It's important for you to remember. And you can maximize your chance of getting to yes by better understanding and preparing for the process, right? So just to rehash, you are going to package up everything and get them to your banker right away. You're going to be quick at delivering anything else that they need and understand that it's for your highest good that they're asking for more data. You are going to stay in constant communication with your banker. You're going to clean up your credit before you go to them. You're going to create your budget, your pro forma, and if they tell you you need it, your business plan. And that is it. I hope that everything I shared with you today was helpful, that something triggered a potential loan for you down the road or today. If you read through all of this and said, I got it, go to your banker. Congratulations. If you don't, and you still want to talk to somebody about your particular needs, give me a call. I thank you for your time today.
Thank you, Julie. This was a great presentation. I know there weren't any questions throughout the webinar, so we'll go ahead and leave some time now for questions. If you want to raise your hand and ask Julie directly, you could do so. I'll go ahead and unmute you as well. So as we go ahead and wait for questions, Julie, any last minute, I know you went through the conclusion right now, but any other last minute remarks or anything of that sort? We'll get to Anna's question in just a moment.
Okay. No, I think my conclusion was, yeah, I can't think of anything right now, actually. I'm really interested in what Anna has to say.
Awesome. Let me go ahead and unmute her. Okay.
Hi, good morning, Julie and everyone. Actually, I just came into the webinar a little late, and you're just talking about this great relationship between a business and their banker. And at this point, we've been in business for a little bit. We're nearing 2 years, and I feel like I don't have that type of relationship with a banker. And I'm just thinking if it's like, it's such an important aspect and such an important thing. So I would like to get your personal information just to, like to see if you can guide me in getting to like a different bank where I can have that type of relationship with building that relationship with the banker. So thank you. Perfect. I'll screenshot this.
Yes, feel free to call the cell phone number there or send me an email. I'd love to talk to you, Anna. And I can share some more of the presentation with you too, since you didn't see it all.
Thank you.
Awesome. Thank you so much, Anna. And we'll go ahead and share the recording and Julie's information as well in our post-event email. So be on the lookout for that.
All right. Any other questions?
You left everyone speechless. I think you answered all the questions, and so I think we'll go ahead and wrap it up a little early then. If there's no any other questions, feel free to contact Julie directly if it's a more personal question that you're a little too shy to ask at the moment. So we'll go ahead and end here. Julie, thank you so much once again for your time and this wonderful presentation. and look forward to having you in the future at another webinar.
It was my pleasure. Thank you for having me. I also want to end by saying that don't get discouraged. If anything you saw in here showed you that you aren't ready necessarily for a loan today, that doesn't mean you're not going to get a loan down the road. Thank you.
Thank you. Have a great